Hi friends, I know it's a not a very happy sign. Why? Because market second days in a row moved down. And before I begin, just my apology that there was some technical issue. That's why there is some little delay in starting of this webinar. Now, market second day in a row has moved down. The worst thing is that as I speak to you, the US market is also down more than 1%. In other words, there could be some amount of a collateral impact on the Indian equity market even tomorrow. Now you must be really confused what needs to be done, how much more it can go, what should be the downside risk to the market. And I'm going to predict in this webinar how much downside do we expect and where do we see the Nifty and the Sensex by end of 2023. But before I begin this webinar, just a small disclaimer that this webinar is only for an education purpose, just to enhance your understanding about the equity market. Please consult your financial advisor before buying, selling any stock. Please note that investment in securities are subject to market risk and past performance is no indicator of future returns. Now with this, if you look at it, what happened to the market last 1 week? We lost near about Sensex and Nifty near about 2.8%. But the fall has been more severe in a mid and small cap. They cracked by almost 5% in last 1 week. Now what is a matter of concern is the advance decline ratio. If you look at this advance decline ratio, it's very, very bad. It's not something that, only one company advance in Sensex out and 29 decline. That gives an idea that the fall has been across the board. It's not that one company or one particular sector is basically pulling down the market. I think the fall has been across the board. Very similar with Nifty. Only 3 company advance out of 40 and 47 decline. In BSE 500, 33 company only advance, 467 decline, and something very similar kind of a scenario. India in last 1 week, like if you look at it last 1 week, we lost near about 14-15 lakh crore, and we are at the same market cap level which we are at 31st August 2023. Now before I talk about further, let's try to understand why the market is down. What are the plausible answers given by the market man? When we spoke to some brokers, when we spoke to some analysts, what have been one common answer that comes, and these are all plausible answers. See, I must tell you, no one has a short answer why the market is going down. These are all probability that everyone has been talking about. One is that profit booking in the mid and small cap. Why? Because mid and small cap have done extremely well, and hence some investors are locking in the profits. That's the reason number one that has been coming. Number two, geopolitical tension in Israel and that Gaza. As I speak to you, situation continues to remain little grim there. Number three, the attributes at the beginning, the valuations are expensive. And if the valuations are expensive, it's time for correction. And that is the logical reasoning coming up. And last but not the least, the yield on the US market is started moving higher. And that's the one reason people are again saying, these are all plausible answers. There is no one can say with surety because of this reason market is moving down, or because of combination of this reason, or it could be combination of all 4 factors that could be resulting into the market pushing down. So we almost lost 5% in mid and small cap in last 1 week. Now question comes, and let's try to understand what has happened to the best and worst performance in the mid cap. I've tried to take top 15, but I could not get top 15 last 1 week. Persistent, IPCA, Muthoot, United, ICICI, Imam, and so on. This company, despite they are down, overall they basically moved up. But in the Presta case, Bank of India, Tata Communication, Laurus Lab, SGVN, BHEL, and so on and so forth, and moved down. And you can see a lot of PSU also in this space, which has moved down in mid cap space. Same way, What is best and worst performing small cap in last 1 week? Bombay Burma up by 20%, Russell Deco, Nicholas, Remco, Sakti, Pem, Sadhana, Nitro, Credit Gramin, Access Gramin, Esther, so and so forth. And the decline, again, MMTC, PSU, KOSL, NMDC still, and RT is not this one, but Mrs. Baxter is down, Vent, Asapur and SDB and so on and so forth. It's a basically mix of, but a lot of companies have declined in double digits. So while mid-small cap index is down by 5%, many companies, as you can see, are down in double digits. And that clearly creating some amount of a panic, some amount of a concerns for the investors. Now the question comes, why this market? Why there's a small cap? This question that we need to answer before we come to any meaningful conclusion. And that's why I said few questions to ponder. Is there any change in India's macro? That's a question number one that we need to understand. Based on this September and post-quarter, September quarter numbers, is India Inc. suggesting that growth going forward is not so great, and hence we should come down? If geopolitical tensions are a concern, how much growth it will save off from India's growth? If that's a concern, let's try to understand that. Or is it due to the poor market sentiment? Let me try to answer each one then point by point. Any change in India's macro in last 1 week? The answer is clearly no. There is no change in the India's macro. And yesterday or today, someone came out with the statement that India would be the second largest economy in Asia and third largest in the world by 2030. Some of the broking firms have come up with the report, India overweight or outperformer. So I must tell you, in last 1 week, there is no change in the India's macro. See, we should always look at every action with a logical reasoning. If there is a change in the India's macro, yes, it could be a cause of concern. Why? Because once the macro deteriorates, it starts reflecting in the Indian profitability. And once Indian profitability starts reflecting, it does impact the valuations. So there is no change in that. The September, post-September numbers, if you look at the commentary from each and every company, almost each and every, I would not say everyone, but almost each and every has been quite gung-ho about the second quarter of FY 2024. No one is saying that, when I say no one, most of them are saying that they will continue to do very well and the second half would be better than the first half. So there is no kind of a challenge there. Geopolitical tension, I do understand that impact the sentiment, but I have not come across any report which says that because of geopolitical tension, India's GDP will get saved off by so and so percentage. And that means everyone is basically making a guesswork. Kya hoga, kya nahi hoga. My sense is that it's more because of the pure market sentiment. And market sentiment is very, very fickle. आज अच्छा है, कल खराब होता है, कल खराब होगा, आज परसों अच्छा हो जाएगा. And I think this is purely market sentiment. Now you need to look at this way. If macro changes, it takes time to recover the market. If profitability of corporate India takes beating, it takes time to improve or repair that profit or loss account. But sentiments are it takes no time to change the market. And today what we are seeing, and my understanding about the market, it's purely because of the poor sentiments, which I strongly believe is not going to last longer. What could lift the sentiment could be some news flow coming in on the geopolitical tension in Israel and Gaza, or some news coming from the US economy, or some news coming in from the Chinese economy. But I must reiterate right now here, the first 2 points, is there change in the India's growth story? Answer is no. Is there any change, or is the India sounding pessimistic? The answer is clearly no. Now, when you invest in the market, it's always, we look at risk versus reward ratio. कि भाई कितना नीचे जा सकता है and कितना ऊपर जा सकता है. तो we, as I keep saying, as long as the risk reward is in favor of reward, you should be fine. But the moment risk outweighs the reward, then you have to be a little careful with this. Now, based on my limited understanding, I am saying the downside risk to the Sensex could be near 60,500, Nifty 18,200, mid cap index to near about 29,500, and small cap near about 35,000 or so. These levels are not cast in the stone. So let me be very upfront here, loud and clear. Market not necessarily it can go to that level. कोई जरूरी नहीं को जितना जाएगा ही नीचे, और ये जरूरी भी नहीं है कि इससे नीचे मार्केट नहीं जा सकता. Indices cannot go down. So please note down this and very clearly in your mind. These are not cast in the stone. Market can rebound, not necessarily that small cap index will go to 34,800 and then it can rebound. It may not go at all, or it can go below even 34,800. Having said that, in the beginning of 2023, we had stated that Nifty 50 should close somewhere by 20,100 by year end, and that we continue to believe will happen. Sensex 68,000, we continue to maintain that level. So yes, market can go down from this level. I am not saying no, but the moment you expand it to 2.5 months, it does give a feeling that market from this level would be at the higher level as compared to the probability of lower level. That is, I am saying by 31st December 2023, we continue to maintain that 20,100 is a most likely scenario for Nifty and 68,000 for the Sensex. So again, question comes, risk versus reward continues to be in the favor of reward. Having said that, I do believe that market can go down because of the poor market sentiments. Nothing beyond that. And these are the levels that if you want, you can take a snapshot of this. If you want, you can take a picture of this on your mobile so that it becomes easy for you to do that. One thing which always makes me happy as a fund manager, and what is that? Corrections. Why makes me happy correction? Now you say, ये आदमी पागल हो गया है, दारू पी के आया लगता है. Why I am saying so? Because see, there are benefits of corrections which people don't realize. Remember, I'm using the word correction, not the crash in the market, because I don't expect crash to happen. Otherwise, because market is not run up only, where is the question of crash coming in the market? Am I right? Why corrections are very, very healthy? And I'll give you logical answers for that. Number one, it makes a very nice base for the next leg of rally. If you look at the 2003 to 2008, market did have corrections every now and then, but that correction makes a nice base for next leg of rally to move up. And something similar should also happen with the current or present corrections that we are seeing. So that's meant it makes a nice base for the next leg of rally. Another good thing which happens with the correction is that the good quality companies moves away from the weak hands to the stronger hands, which is a very good thing for the market to happen. जो इस मार्केट में घबरा जाएगा ना, वो बेच देगा अच्छी कंपनी के शेयर्स. एंड वो कंपनी कौन लेगा? कौन? Those who understand the market very well, वो लेके जाएगा घर पे. And historically it has happened that when market में corrections आता है, weak hands will give away their good quality shares to the stronger hands. And when the money goes or the shares go to the stronger hands, that means it's healthy for the market in a medium to long term. Correction also reduces your expectation from the market, because life में problem क्या होता है मालूम है? When there is a gap between our expectation and the reality. अगर आपको लगता है कि मार्केट 50% रिटर्न देना चाहिए और फिर 40% रिटर्न देता है ना, तो आपको दुख होता है, अरे यार 50% नहीं दिया, 40% ही दिया. बट द मोमेंट you expect to express only 20%, but it gives you 40%, you get little delighted. Am I right? Another example, and it's a classical example, I must tell you, which I also experienced very recently. So, other day we were driving on a highway, and it was clear-cut highway, Western Express Highway. I wanted to go outside Bombay, so I was driving it. So, normally my car gives me 8 to 9 kilometers per hour kind of, not 8 to 9 kilometers per hour, 8 to 9 kilometers per liter. And when I was driving on that, तो उसने को 14-15 का मुझे एवरेज दे दिया. And I was so delighted with that. Am I right? Because my expectation was so low, 14-15 is not a good range, I'll be very frank with you, but that's what it gave basically. And that's a question of what you expect and what this. So, corrections will reduce the expectation. अभी आप लोग सोचते होगे ना कि मैं तो 50% रिटर्न बनाऊंगा, 60% रिटर्न बनाऊंगा, I think we'll all become reasonable. And once your expectations and reality are in sync, the life में problem थोड़ा कम हो जाता है. And corrections also gives you good opportunity to buy shares which you wanted to buy but could not buy. I must confess here, on Monday, I bought shares. It does not mean that I will not buy again as the correction happens, and if it is available, I will still buy more. And that's what it basically is. So the corrections are healthy for the market, for the investors. I know it sounds little odd or little, something against the logic, but that's what happens. So 4 strong reasons why market corrections are healthy. It makes nice base for the next rally to happen. Shares will move from weak shares to the strong hands. It reduces investor expectation from the market. That means you are in sync with the reality. And number 4, it gives you good entry point. I strongly believe risk and reward are in favor of reward. Yes, there will be corrections. As I was saying about the level, there could be further corrections. I'm not ruling out that. But that corrections are healthy for market to make a nice base. And we continue to believe that Sensex will be at 68,000 by year end and Nifty at 20,100. With this small humble request to all of you, please do not put question which has already been answered. Please do not keep putting your question again and again. I will pick up the question based on the first in, first out. And score of the companies is available on our website. So I'm not going to waste your time and my time answering company specific. So the moderator is not going to pick up any company specific question. So and before that, just a small announcement that we do have a subscription at the very special rates. It comes with not only 47% massive discount, but it also comes with the added feature of 6 months extra. So for 2 years, you just need to pay 19,999, and you get, instead of 24 months, you get 30 months subscription. It's a limited period offer, and this offer is only available those who are attending this webinar. This offer is not available on our website. So my request to all of you, in case if you want to avail this special offer, please use the link that has been provided below the video box, and that link will only help you to get this offer of 19,999 for 30 months. You can extend as many times as you want. There is no restriction on this. With this, let's open the floor for question answer. Mahesh is asking a very relevant question. I used to thought, okay, I will get considered from market Mojo, but now you are saying that you are not considered either. Then what is your role? Sir, our job is to guide you it's up to you what you need to do this. Because when we advise you something, not necessarily everyone will follow our advice in a disciplined manner, number one. Number two, we don't do KYC of yours, am I right, in Markets Mojo platform. So we don't know your risk appetite, we don't know what is your risk profile, what is your net worth, what much amount you need to. And that's why we say, please consult your financial advisor before buying and selling any stock. This is a mandatory disclaimer that we need to give as prescribed by the regulator. So Mahesh ji, I hope you get the answer. And the reason why you join Markets Mojo, that reason continues to be there. Whether it's a Mojo stock of the month, model portfolio optimizer, you keep getting those features anyway available. So the reason you join, it's still there. But disclaimer is part of a mandatory requirement. Raju is asking, we have multiple companies in the last 1 month moving suddenly from 80 score to 65 in Mojo list. Nearly 10 companies exit Mojo list. It becomes very difficult for us to handle capital allocation. Sir, any Mojo advice? Raju ji, we have time and again said, and let me repeat now 10 times the same advice. Sometimes you may have missed my comment, and hence I'm repeating not only for you but for the benefit of other customers and investors also. See, when a company loses its Mojo stock status, that company does not become a sell. It just become a hold with a score of 60-65. It is a hold. So if you have bought that company, that does not mean that you need to exit that company. What does this mean? That if you are planning to buy more of the same company, you should not do that. And I'll also give you a formula when to exit. For example, if a company was a Mojo stock and no longer a Mojo stock, so when you should exit from that company? Very simple formula that I can give. It's a more of a it's not a very scientific formula, but more of a indicative formula. If the score goes below 60 and scrip is falling, please exit from that. Even if the scrip goes below 60 but scrip is trending upwards, don't exit from that company as long as it's trending upward. I hope that helps you, Raju ji, in terms of making your strategy with the Mojo stock. Manish is asking, hi Sunil ji, how are you? What FI knows which we don't know, that they're selling and we buying and people saying profit booking? If FI invest in banks and finance, then why other stocks are down in mid and small cap? So it's not necessary that FI are smarter than us. I must do that. I must tell you that, okay? I think your basic assumption there is that FIs are smarter. They are not smarter. In fact, they are the one who sold very heavily when the valuations were very low, and they are the one who bought heavily when the valuations were high. So I don't have a great respect for FIs. And remember, FI selling is also a function of their investors asking for money. Suppose if you have invested in that particular scheme of FI, and if you ask for redemption, what he will do? He will be forced to exit. Why? Because उसको तो liquidity create करना है आपको पैसा देने के लिए. The same thing happens. So I don't think the FIs are smarter. What they know, which we don't know, many times I've realized that, they will come out with the sale report and the company moves up. Maybe not one or immediately, but over medium to long run. If FI invested heavily in banks and finance, then why other stocks are down? Remember, medium small cap also goes down, is also a function of retail investors, function of HNI investors, also function of mutual fund. Why? Because they also have a lot of exposure to medium small cap. Now, if you look at it, in a medium small cap, it's also a function of sentiment. So, जो sentiment थोड़ा fragile होता है. I've always seen medium small cap. See why medium small cap are more risky as compared to large cap? Because sentiments in medium small caps are more fragile as compared to large cap. And due to that, they not only move down significantly, but they move up also very significant. And that's why it's called higher risk, higher returns on the medium small cap. Now, your question is that, see, there's also a reason why medium small cap fall. I'll explain you why. If one day the medium small cap goes down, some of the investors would have taken a position on that medium small cap based on the margin funding. Now your broker will ask you to recoup the margin. Why? Because LTV, loan to value, would have come below the threshold level. Now investors have a two choice. Either bring in more money from his home and recoup that margin, or he will be forced to exit from that company because he can't meet that margin requirement. And once he is not able to do that, it creates further pressure on a mid and small cap companies to go down. Having said that, Manishji, as I told you, it's more of a sentiment that is driving down the market. Fundamental factors remain so strong. Indian numbers remain very, very strong. And if you remember, on last Friday when I presented the numbers, India did extremely well in terms of bottom line growth, and the story continues to remain the same. Geopolitical tension, I really don't know what kind of damage it could do to India Inc. or Indian economy at this point of time. Or I have not come across any report also which says that okay, it would save off maybe 20 bips from India's GDP or 50 bips from India's GDP. I don't know. We are all making a guesswork what impact it could have on India based on geopolitical condition in Israel. These are all guesswork. Even crude, which moved above $90 per barrel, is now trading below $90 per barrel. So even crude could have been a one effect that could have pushed down the India's what we call economic growth or inflation and so on and so forth. I think that also doesn't look right now a concern at all. So we need to wait and watch. But as I told you, the sentiment, hawa ke jhoke ke jara hai, it will change, and that's when then everyone will say, "Wish I had an opportunity to buy." See, I must tell you that in March 2023, that is in this year only, the market gave a very beautiful opportunity to buy in mid and small cap. Not many investors bought it. And those who remained calm and composed in this market and the March 2023 market, they made bountiful returns in this. Something similar will happen. And human memory is so short that we forget what happened even in this year itself, which is less than 12 months, what happened, 6 months back, what happened. But we don't remember those things. So that's what has happened. So I hope that I answers your question in a clear-cut manner. In case we are still not satisfied, please feel free to ask. I'll be more than happy to answer again or make an attempt again. Hello, Sunil sir. Could you explain in detail looking past high interest rates at the next big risk to your personal finances? So normally when the rate of interest is high, it does impact the equity market negatively. And when you impact negative market impact, will definitely your the total overall assets do go down. Now, India always has been a high interest rate economy, if you remember that. This is the first time, and in fact, maybe Friday, if I am in front of you, I'm going to showcase you how 30-year mortgage rate in US are very closer to now India. I think the gap between India and the US, I think, is the most narrowest to the best of my understanding. Because India always used to have 8 or 9% or 7 to 8% kind of a mortgage rates, while in the US used to 3 to 4%. So difference always has been 350 to 400 bips, which has now come down to maybe 150 bips or 140 bips or so, kind of a stuff. And I wouldn't be surprised if what is happening in the US and what is happening in India, this gap can further narrow in the years to come. So, is the risk interest rate is a concern right now? Answer is no, basically. Whatever the rate cycle that we saw and rate of interest moving up in India seems to be abated now. No one talks about that there will be more rate hike. Only thing one is debating when would the rate cut would happen, and it doesn't look like it's going to happen in 2023 for sure, purely because inflation is going to remain little stubborn. But I think the probability of rate hike from this level right now looks little out of the place. But having said that, the way Shaktikanta Das had made a statement couple of months back, I think he did hint that in case for inflation does not come down, he might be forced to hike rate of interest. If at all that happens, it would be one more rate hike. And if you look at the Fed watch tool, that what it says, CAB Fed watch, it clearly says the possibility of rate hike on 1st November is ruled out on FOMC meeting. So right now, is the rate of interest is a concern? The answer is no. And even if you look at the numbers, despite India paying a higher rate of interest, there has been a very good returns, very good growth in the net profit Y on Y. So no, I don't think it's a concern as we speak. Ajay ji, you are right. Your memory is absolutely correct. I did predict that FIs should come back post Navratri in the market, and unfortunately, they sold near about 4,000 crore. My view continues to remain the same. They should be net buyers in the weeks to come, purely because I don't see India growth story deteriorating. I don't see India coming out with the poor set of numbers in the second half of FY 2024. And India would continue to be the first choice for the global investors. And due to that, I do believe that Indian equity markets should do well. And if Indian equity market does well, FI have no other choice but to invest. So I do expect FIs to come back very strongly. Now, of course, as I said, I did prove wrong post Navratri. Navratri just got over a day before yesterday. But I do believe that they should come back very strongly. Yes, one day does not become a trend. I do believe them to come back very strongly in the next couple of weeks. Payal, hello sir, I have invested 80% of my corpus in PMS and model portfolio. I want to invest the balance 20% now. Would you suggest invest in this in model portfolio, gold ETF, government gold bonds, NCD for this 20%? Please advise. See, it's all depending upon whether you have taken Payal ji, taken care of your emergency funds, which you should always do that. So I don't know, your question does not specify whether you have taken care or not. You have taken care of your life insurance, you have taken care of Mediclaim. So, you should invest in equity market only those funds which you don't need for minimum 3 to 5 years. Minimum 3 to 5 years. Now, if this condition satisfy, please go and invest in PMS or model portfolio. I always recommend you should invest in gold and silver 10 to 15% of your total portfolio. It's not because you have a view on the gold and silver prices, because it gives lot of stability to your portfolio. So if that condition has not been satisfied, Payal ji, that you have not invested 10 to 50% gold or silver, please go and buy gold and this one. But if you are exhausted, then it doesn't make sense to increase your allocation to gold further. Do you think valuation right now overblown, specifically price to earning? I don't think, Parikshit ji, that valuations are out of the way. In fact, I did present it, I think on Friday, that valuations are below median average. See, it's not the valuations gone out. See, remember, median small cap in last 2 years. See, unfortunately, this problem happens that we forget in 2022, median small cap moved down. 2023 में ऊपर चला गया, but if you look at 2 years, it has not gone anywhere. In fact, it did go up, but it's not gone out of this 14-15% कुछ growth होगा, CAGR returns होगा median small cap में. But if you look at the growth in earnings would be much higher. So it's not that we are trading at a very, very expensive valuation and hence is a cause of concern. On the contrary, as I said time and again, if it is a corrections in the market, it should be used as an opportunity rather than worrying about the valuation or so and so forth. Now, I know, Parikshit, I would take your question as the last one. Why? Because it's almost 8:15. I don't want to hold you back. Tomorrow I'll be in front with our PMS customers, some interesting data. And if time permits, on Friday, I'll be in front of you with the trend analysis with my colleague Mohit Batra. I'm going to discuss some interesting trend in my Friday webinar, so please come for that also. Tomorrow webinar would only be for our PMS customers some interesting data that I have compiled on a median small cap. With this, thanks a lot everyone taking time out and attending this webinar. Don't forget to subscribe our special offer at 19,999 for 30 months. Why 30 months? Because 2 years plus 6 months additional that we are offering with our subscription scheme. It's a very limited period offer, only available those who are attending the webinar. With this, thanks a lot. Good night. Take care.